geopolitical risk, election uncertainty, has been a long-term buying opportunity, particularly for value-minded investors or contrarians who can take advantage of big lurches in prices. My concern is that we've arrived at a slightly different situation today, where geopolitical uncertainty is more of a feature of the economic and investment environment rather than a bug.
Joe Little there out of HSBC Asset Management. So he was here about an hour back, just laying out really the rationale behind why perhaps now geopolitics is something to certainly consider as you allocate your assets.
Yeah, and we heard that not just from Ray Dalio, what you heard at the Wealth Summit yesterday when you were there as well. But let's talk a bit more about what Ray Dalio did say. He's talking about U.S. elections and the risks around there, and the growing tensions between Washington and Beijing are among the most critical issues right now for investors. The Bridgewater Associates founder told the Hong Kong Forum that economic warfare can lead to military warfare. For more, we're joined by our China correspondent, Min Min Lo. Tell us a bit more about what Dalio said.
Yeah, I mean, geopolitics, it was like at the forefront of two different economic conferences yesterday that was held here in Hong Kong. So Ray Dalio was talking about how internal politics, internal conflict in the U.S. could be a very big factor, especially with the elections coming up. If both political parties cannot agree on the outcome of the election, except, of course, their common unity against China, that is a major risk, especially with the U.S.-China tension. And he's not, he's still putting his bet on China, though. He talked about how China is one of the few countries that are that is a big player when it comes to revolutionary new technology, and that assets in China are very attractively priced. But you have to diversify everything, your asset classes, your countries, your currencies. He also talked about how although a conflict with China over Taiwan is not an imminent threat, but the one China policy may not continue forever, and so investors who have exposure to China could be affected. Have a listen to what he said.
Economic warfare precedes military warfare. American investors investing in China could experience from their government negative consequences for that. And then there's also the worry from that the Chinese side could make that challenging.
Yeah, and geopolitics now is that filter that every investor and business is kind of making their decision against. Because, I mean, if you talk about prime example today, the Dutch and Taiwanese chipmaker plans to open up a plant in Singapore. That's all about hedging their risks. And also these so-called neutral countries in Southeast Asia, also in the crosshairs with the Chinese solar maker planning to halt production in Southeast Asia because of these trade barriers from the U.S. as well.
So it's really picking up, and I think you make a very good point, right? So you look at the assets that are doing well. So NVIDIA, that's one. Joe Little, we were talking earlier, right? This AI thing is a way that people are hedging against the geopolitical risk, right? We were speaking with Ben Wei yesterday out of Macquarie. Their longer-term outlook allows them to be agnostic to political cycles somewhat, so alternatives are doing well. And you mentioned, of course, these two conferences. I was there yesterday at the Wealth Forum, and interestingly enough, everyone wanted to talk about something else, but almost every panel brought up geopolitics as a key risk. In fact, let's hear from some of those key voices, of course, that we heard from our Wealth Summit yesterday.
Geopolitical risks and the possibility of a tail risk event has gone up dramatically. So
you believe that?
Yes, and as investors, we should not ignore this. The biggest question for you as an investor is, can I hedge against it? And unfortunately, there the answer normally is no, because it's either too expensive, you miss out on the upside. So what you can...
And impossible to time.
It is impossible to time. The only thing you can do is prepare. Do not try to predict.
Geopolitics are definitely a big concern for ultras, not just in Asia, but across the world. I think the conflict in Europe, the conflict in the Middle East, and the superpower tensions are definitely leading to clients being concerned. That concern is leading clients to look for the safest and strongest financial centers, but also the safest and strongest financial institutions.
Yeah, and we're only in June, and we're not this year of elections isn't over, Mindy.
Yeah, elections play a huge part as well. We already see how it's shaping markets, especially with Modi's election.
Yeah.
You know, exit polls missing the mark, and then he lost the majority. It's triggering a slump in markets. And then Mexico as well, with the landslide victory of the ruling party, raising concerns of increased state control. And then you have all these conflicts everywhere. It seems the Gaza conflict, and then Ukraine, and potential tension in South China Sea, where much of the world's trade passes through. So all these are potential disruptions to supply chains.
So, and you're talking about maybe potentially two different trade wars that are going on, right?
Yeah.
If it's high-end manufacturing, certainly we talk about that a lot. Even in the low-tech exports, you're starting to see that. What are we seeing there?
Yeah, I think that's something important to point out. It feels like something quietly brewing because there's been a lot of focus right now on all these tariffs on the new growth drivers, your EVs, your solar cells, your batteries. But China has been also ramping up a huge surplus, near record surplus on all manufacturing goods. And I'm talking about the traditional industries like your steel, your animal feed. Their exports of soybean had hit nearly 5 times of last year in the first 4 months of this year. And China traditionally is an importer of soybeans. So that's really speaking to how all these goods are, it's very hard to get them consumed in China because of the weak economy and the prolonged property crisis. And this combination of soaring exports and cheaper prices is a very dangerous combination because it could trigger reactions not just from the US and EU, but also the emerging markets. We already see Latin American countries increasing tariffs on Chinese steel. Countries like Thailand, Saudi Arabia are considering to take similar steps. South Korea, India, they also put tariffs on certain Chinese manufactured goods. So this is something to look out for as well, a potential trade war on both fronts as low-tech exports pick up as well.